Hey traders and investors, it's Serge Berger here with the Federal Reserve having its first interest rate hike, 25 basis points out of the way now. We've had some wild price action in equities since, and I think it's important to give you guys a bit of an update here. So let's have a look at what's going on. First of all, guys, from a seasonal perspective, I've pointed this out before. I'm going to point to it again because it is important. Thus far, we've more or less had a typical December seasonal pattern. Look at the S&P 500 typical seasonal pattern. We had a bit of a rally the first day or so of the month. Then we had a sell-off, and then we've rallied. Of course, today's sell-off makes today is Thursday, December 16th, makes things a little bit more difficult again. So let's have a look at the charts and give you guys a bit of perspective. So first of all, on Friday, so that's December 18th, we have a big options expiration day taking place, one of the largest ones in a long, long time. So I would say at least part of the sell-off we saw on Thursday, December 16th, could be blamed on that. So that's what I would say from that perspective. Also, keep in mind that oil and energy, they continue to act very, very badly. And as long as that takes place, it's very difficult for the broader market to lift higher. If you think about it from a fund manager perspective, it's very difficult for fund managers to want to hold this kind of stuff into the new year because they might lose a job. So a lot of these guys want to sell some of these horrible things that have yet to bounce. And they're selling it now. There may be some of that, again, coinciding with options expiration or a reason for options expiration to sort of become even more volatile. So that's a big part of, or at least a good part, I think, of what's taking place here. But going back to the S&P 500, just for price level perspective, a lot of us are focusing on that. So again, we've completely erased Wednesday's post FOMC rally with that sell-off on Thursday, and it's somewhat concerning. What I will say is that the bullish reversal remains intact. If you look at the bearish exhaustion we had on Monday, the 14th of December, it was followed by follow through buying. So it's, again, not entirely unexpected to see some post Fed volatility. I think was a bit much, so we do have to be careful. I think that's really the point. So maybe a little bit more weakness, but not much more. Otherwise, we are breaking this chart, and then we could be in for a much more difficult year end than we bargained for. The transport's looking absolutely horrendous. Huge outside reversal day in the transport. So that's very, very ugly. Again, energy, same thing there. So again, base case, I'm going to just keep it very simple. Seasonally, we are still more or less on track, but Thursday's situation is making things a little trickier. And again, the energy sector does need to start lifting. We do, on the single stock basis, continue to have stocks that are acting fairly well, but of course, with the broader market being pushed lower like that, very difficult for anything to really rally. Whole Foods, a stock that has seen some above average positive move as of late. Had an intraday try at breaking higher this on Thursday, but of course couldn't do so with the broader market being sold so heavily into the close. Things like Home Depot, more or less strong all year, consolidating nicely here. So if and when the market does want to give it one more push higher into the year, here is another stock that could potentially work. So I hope this makes sense, guys. Please subscribe to my channel. Give us a like. That's how I grow and move up on the YouTube ranks. That would be much appreciated, guys, and I'll see you in the next video.